Hello guys, welcome to today's stream. It's a big one. We've got the GDP print from the USA coming out, and I will just say guys, very quickly, if you haven't already, make sure you click on that subscribe button to the channel and the bell notification to make sure you're up to date on everything that goes on. Number one place, tell you that for nothing. AJ, how are you?
Yeah, I'm doing well, thank you. Make sure you smash that like button. It does really help us out as well. And yeah, I'm doing good. This GDP news data that's going to come out, we'll see how that's going to affect the market. But there's a lot of resistance coming in, so we do just have to be aware of that as well.
Very true, very true. And one thing is, guys, there's no scams and there's no pump and dumps here. So I'm just gonna leave that one there. But if you were victim of the Voyager pump and dump and the scam, whatever it was, rest assured, because they have $1.9 million. But it's gonna go to the staff members, the good old staff members who lost you your money. So you can have a good night's sleep knowing that they're getting paid very well. It's an absolute joke, that, isn't it? It's ridiculous. Bloody hell, lose everyone their money, and then you're like, oh, okay, let's still get a bonus. But anyway, so as we know, guys, at the moment, we are at these key levels of resistance. There's not too much movement to the upside. And also there's just a lot of kind of hesitation. We're going to have a look at the charts in a second, but obviously just want to quickly go through. We all know through the week we're down, but up a little bit, over this previous day. 5 things you need to know to start the day. Obviously, like I said, guys, we have this massive GDP print coming out, two negative GDP growth rates. And that's not a recession, is it?
No, well, apparently not now.
Exactly. So, I think maybe if we get 3, we might get the White House to say again, no, still not in a recession, mate. No, I don't know what you're talking about. We've never had a recession. No one's ever had a recession. What are you on about? Yeah. But there is the Jackson Hole. So Jackson Hole Economic Policy Symposium. What an absolute, that's a fancy way for saying, have a couple drinks and talk about your job. But that's going on. It's a government way of saying it, I should say. But that's going on. That's something that is very much anticipated. And tomorrow we are going to have Jerome Powell kind of release his official statement, should we say. Everyone's wondering how hawkish he's going to be. Student debt, basically, Joe Biden has essentially just kind of printed more money in order to pay off of some of the loans. So that's what the relief is. And so some people have said, hey, well, actually, you're kind of increasing inflation. So that's another thing. SPACs, not really anything we need to worry about, but they're just disastrous. Don't ever invest in them. Not financial advice, but, that's my thought. And then positive sentiment because China has released a bit of stimulus, and then better than expected data from Germany. So because Germany actually had relatively good GDP growth, people are now thinking, well, maybe we can begin investing in some assets again, because hopefully, the US will be okay. So just wanted to kind of bring that to your attention.
And we are seeing that. We also, just to add on that quickly, obviously I'll show you in the charts in a little bit, but we are seeing that on the charts as well. Looking at the DXY, we're seeing the DXY get a slight rejection, and then we're seeing the traditional market and the crypto market have that little move towards the upside.
Yeah, exactly, and that is, it's really good. And I was going to add on to here. So one thing that we do have to worry about, I guess, not right now, but in the future. So we're looking at quantitative tightening. We've been quantitative tightening for about $42.5 billion a month from the Fed, but that's now going to step up to 90. And basically, JP Morgan and Morgan Stanley are both worried about it. Basically, there's a potential ripple effect. And I don't think the markets are adequately pricing in quantitative tightening. This is something that could lead us to the downside, and is something that I think the Fed are going to speak about tomorrow. So we have to be very cautious of that. And like I said, so it went from 47.5, my bad, 47, not 42, up to that 95 billion level. And so that's going to be as of September. And we can kind of look down here, S&P bouncing off that 200 moving average. Obviously, we can, look at this in more detail. And then we have the 100 here and the 50 down here in pink. But yeah, very, very key levels because we are in a downtrend. And this is, this is the big guy saying this, the JP Morgans and the Morgan Stanley. But let's have a quick look on some of the charts, AJ. See kind of how we are just in, I see Charlie Thompson, just back from holiday, still not a crypto millionaire. No, mate, it's going to take a lot longer. You haven't missed out on anything. Basically, we're bearish. That's all we have to say.
Yeah. The best way to
You got
become
excited.
the best way to become a crypto millionaire is to dollar cost average in the bear market and
or start as a billionaire.
Or start as a billionaire. Yeah.
Anyway, let's have a look at have a look at the chart here.
So, guys, jumping into the charts, looking at the DXY. The DXY, I mentioned this resistance level up here, and we are actually getting a rejection. This is a resistance level because previously this was a high back here, and we are getting this rejection from that resistance, and this is good for the traditional market and the crypto market because we have a look at the S&P 500. So looking at the S&P 500, we can see that we had this downwards trending resistance level. We got another rejection from it, like we were getting rejections back here. And as of a few days ago, we did come down and test the support level, which was previous resistance, major resistance previously, and major support.
Can I just quickly cut in here, AJ?
Yeah.
Very sorry. Just wanted quickly to have a look. From Elon. Yeah, basically we're bearish. Just wanted to bring this up. So the jobless claims were lower than the estimated. So that again, that means that a strong economy, which is kind of like, not too great. Economy shrinks at 0.6 annual rate, estimated at 0.7. So if you see this here, forecast was minus 0.8. The actual was minus 0.6, which I think might be bullish. Do you want to have a quick look on the smaller time frames here, AJ?
Just pulled it up. Seen a bit of reaction towards the downside, but nothing. The price was bought up straight away, so nothing too exciting yet.
Okay, let's see how these, because there are going to be quite a lot of orders that have just been filled as well.
Yeah.
So on this, hopefully this means that we're going to get towards a soft landing, and a soft landing means no recession, and no recession means that, the economy is doing okay. And so therefore, you don't have to invest in treasuries, which are super safe, and those typically pump the dollar. So maybe we'll see the DXY come down. I'm hoping.
Yeah, that's what we want to see for the traditional market and the crypto market. If we want to see them pump, we need the DXY to come down. So as of right now,
the 1 minute
on the DXY?
Yeah. Let's have a little look. See if I'm insane.
Good.
Oh. Okay. So I mean, it's a weird one because what we're saying is the economy is now stronger than what it was. Which. Oh no, I've cut out. Okay.
No, you're all good. You're all good.
Good. So it's a weird one because what we're saying is kind of the economy has since got stronger. But I think we do have to consider treasuries that people invest in quite often.
Yeah.
Anyway, sorry.
Yeah. We're not seeing much of a reaction yet, are we?
No, I think we'll probably be waiting on what Jerome Powell says. I'll just quickly bring up the Bloomberg terminal and have a look, see if they're saying anything of interest. So annually, GDP so annually it's risen at 8.9 versus the estimate of 8.7, which is good. Annual price raises, yeah. So anyway, sorry, carry on.
Yeah. So just looking at the S&P, we are finding support along that along this major support level here. If we can continue and if we react bullishly to this GDP data that's come out, then of course we are going to hold the support and bounce off the support and most likely come back up and test the resistance up at this white line here. Once we can break that, for me, I will be quite bullish on the traditional market and the crypto market as well, because obviously the crypto market does follow the traditional market as well. But yeah, we just got to wait and see if we can get this nice bounce. But as of right now, we are just holding that support. So nothing too exciting there. On the Bitcoin chart, looking at this 1 minute again, we saw a little reaction, but nothing major, not like we've seen before. And yeah, zooming out, looking at the sort of bigger time frames here, we can see that we are still within this bear flag on the 4 hour. We're still in this range from this support at the bottom and this resistance at the top. And yeah, as of right now, we did come and test it as of, is it 26th today? No. So we did test it this morning, the resistance, but we are getting a slight rejection from it. But once we do break towards the upside of this or towards the downside, I do think we're going to see a pretty big move, because if we do look at this chart here, we are at a major resistance level, and this is the 5th day that we have been in within this resistance, as you can see right here. And a break towards the upside, I think, would bring us a nice move towards the upside up to this white level here at around 22, this white resistance level up here at around $22,500. If we can break above that, then like I said yesterday, we can invalidate that $12,000 target, because we invalidate this bearish flag that we can see here. But if we get a rejection from this resistance, then that bearish flag is still in play, and the $19,000 level is the next level I will be looking at. So yeah, we just have to see sort of what happens with the DXY. If we do continue to see this rejection, then I do think the crypto market and the traditional market will, the crypto market will break that resistance, and the S&P will hold that support. If we go on to the shorter time frame, maybe the hour on the DXY, can we see any resistance coming in? Not really. So yeah, just this resistance on the 4 hour that we're looking at. And yeah, as of right now, we are getting that rejection from it. If we can continue this rejection and we can continue this momentum towards the downside on the DXY, then again, very bullish for the traditional market and the crypto market as well. But nothing too much to update you on the crypto market, because we are still within this range here, and we are still within this resistance level here. So nothing too exciting to update you on.
Yeah, pretty much. But yeah, like I said, I feel like I feel pretty good. This is making me feel all right. It's kind of like that. It's just the overall sentiment, and it might not be right now, but I think we are going to have a nice little push to the upside over maybe the next couple of hours. But also, one thing to keep in mind here, guys, is that obviously everyone is now looking at what's going on tomorrow, and tomorrow we have some big news.
So a lot of people could be holding off for tomorrow as well.
Yes, exactly. Yeah. So that might be that kind of like, hey, this looks good, but is it a trap? So obviously this is what we have today. But tomorrow it's already loaded. I don't know why I was waiting for it. So we have the core PCE, which is the core personal consumption expenditure. And this basically means like, how much it is that I guess people are spending, pretty much. And then we have the Fed Chair Powell speech. So this is going to be very, very good. So we're actually going to see what it is that their plan is, how hawkish are they going to be, how long are they going to be increasing these Fed rate hikes for, and to what level. So some people are talking about them pausing. I think that they might pause into next year. I don't think they're going to pause this year. But I think that's kind of okay. That's what the market is anticipating. But there are some people that now, I guess, are maybe getting a bit too excited. But I guess that one thing that we have to keep in mind, GDP is down, or GDP is, yes, it's negative, but it's less negative than what was expected. Now, as if your job, and you're Jerome Powell, is to make the economy smaller so inflation goes down, but it doesn't contract as fast as you want, what are you going to do? You're going to have more rate hikes for a longer period of time to make sure that you get unemployment to a high level, to make sure that companies are not growing as quickly. That just to make sure that the whole money supply goes down. So this is one of those bittersweet moments, It feels really good because we might get towards that smooth landing, as opposed to just massive recession, everyone's crying. But This now means that Jerome Powell tomorrow has to say something a little bit more hawkish and a little bit more aggressive to kind of get everybody to feel as though, look, our estimate was off, but we still know what we're doing, and we are going to continue these rate hikes because inflation will come down by the end of, I don't know, 2 years or whatever, something like this. So that's why I think we haven't seen too much of a movement in the markets. But I think, I'm interested to see what's going to happen when the New York Stock Exchange does open, and how the community kind of reacts to that as well.
Yeah, definitely. Before we go, should we take a quick look at Ethereum as well? Yeah, did you see that wise Ben dancing up and down?
Yeah, just accept it, enjoy it.
You look like Churchill. Do you remember that Churchill advert?
Oh yeah. Oh, jokes.
Taking a quick look at Ethereum. Yesterday, I did give you a potential Ethereum trade. Unfortunately, the trade wasn't executed because we didn't break that support. We did just continue to see that price action towards the upside. So as of right now, I'm still not taking that short position. But we are coming into resistance for Ethereum. Like we are with Bitcoin, we are in that resistance level for Bitcoin, and we are coming to that level for Ethereum as well. So as you can see, this level here has been previous support before we got that break towards the downside, and previous resistance before we got the break towards the upside. And we are, we did break towards the downside, and now we are coming back and testing that as resistance. So this is going to be a very strong resistance level because it has been major support and major resistance previously. So from this level, we could either expect a break towards the upside, which then I do think we could come up to that $2,000 level. But if we do get a rejection, then I'll be looking at this rising wedge pattern. I would be looking at those take profit points being hit. So the first TP, as I said in the previous videos, is $1,350. And then the final TP is all the way at the bottom at around $1,000. But I'd only expect those price targets if we were to get a rejection from this resistance here. So that's what I'm waiting for. We are very, very close to that resistance level. So I am anticipating that we are going to come and test this resistance level. As I said, a break towards the upside would be bullish, potentially come up to $2,000, but a rejection from the resistance will bring us down to these lower price targets. So just be aware of that as well. We do have this major resistance level here.
Yeah. And also, just a quick question there, as you can see on the side, AJ, the 4K portfolio, is it on the same buy order strategy? Do you want to just give them a quick update on the number and also then the strategy? I'll let you find that for a second. So just to give you guys an idea, so this one is our Femex.
Yes,
our Femex. So
it was $5,000.
Link down in the description if you guys want to join us on this. So where we currently are, let me just bring your screen up here, AJ. Where we currently are is...
Sorry, let me just go back quick. So we started off with $5,000 with this account. It's currently at $6,229. It was almost $7,000 at one point, which was good. And this was just from dollar cost averaging into Bitcoin and Ethereum. We spoke about this previously. We're only getting into sort of the safe, cryptos such as Bitcoin.
And we're doing it in a safe way because we're dollar cost averaging and not just aping in. We don't want to be one of these Wall Street bets accounts.
Yeah, definitely. But also, we're sort of staying away from those altcoins as of right now because there is those lower price targets. And if we start getting into the altcoins now, then and then we see that next leg down for Bitcoin, then we are most likely going to see those altcoins get absolutely destroyed. So when we get into those altcoins, we want to be at those very, very low prices, or we want to have that confirmation that Bitcoin has established that bottom. So currently in a nice profit of $1,200, and we still do have some buy orders. So let's take a look at the buy orders. So for Bitcoin, there is a buy order at $15,500. and there's a buy order at $17,000 and a buy order at $16,000. And for Ethereum, there's a buy order at $800. So we still have those buy orders in play. We still have those dollar cost averaging positions in to dollar cost average our position down if the price does continue to fall. And yeah, as I said, once I'm happy that Bitcoin has established its bottom, then I will be happy to move this portfolio into a more medium risk or high risk portfolio by getting into those medium risk altcoins and those higher risk altcoins as well. But like I said, I just want that confirmation of the bottom. I think I will do another video on this. I'll potentially do it. Is it Thursday today? Yes, Thursday. So I'll potentially do it tomorrow, or early next week or over the weekend. I'm not sure yet. I'll do it within a week, but I'll do a video on going over this portfolio and the portfolio strategy that I want to get into next. But I'll go through in that video some altcoins and where I want the altcoins to come down to before getting I want to show you where I want the altcoins to come down to for me to be happy to sort of get into those positions, because for the altcoins there is a lot of support, but we aren't there yet. We want the altcoins to come down another maybe 10-20% before we are in that massive buying opportunity for me personally. So I'll go through a video looking at the altcoins that I'm looking at and showing you where I want the altcoins to come down to before I even think about getting into them. So yeah, I'll make sure I do a video on that, just updating you with the whole portfolio, because obviously we want to make the most of this portfolio. We want to make the most of those returns, and by doing that, we need to get into those medium and high risk altcoins.
There you go. And obviously, guys, like we do post, we have done on Twitter recently, we do have a separate portfolio, which we treat as a bit more of a trading portfolio.
Yeah.
But even with that, we're still very, relatively cautious, shall we say, because we are so volatile. So a couple of positions have been taken on there, but not too many, just because of, I guess we're kind of waiting for the conditions to be a little bit nicer to us and a little less stupidly volatile.
It's a lot more fun to trade in a bull market or sort of in the middle of the bear market. I feel like we're coming to the end of the bear market, and this is sort of the worst time to be trading because the market is just so uncertain. When you're halfway through that bear market, that the price is coming down, so those shorts are a lot easier to open. And same with the bull market, opening up those long positions is a lot easier, and then shorting those pullbacks in the bull market as well is also a very good strategy that I used in the bull market. So once we are back in that bull market, I can start using those strategies again, which I used in the last bull market, which will be great. But as of right now, it is a little bit harder to trade because we are so uncertain right now, and there's a lot of talk of going lower, but there's also a lot of talk of that we have established that bottom. But yeah, we are going to continue trading, and I'm going to bring as many trades as I can to you.
There you go. Okay. Well, look, guys, obviously follow us on Twitter. Make sure that you do that. Get a real good understanding as to exactly what we are going to be trading and how we're going to be trading it. And also, I think later on, we'll just keep you guys up to date with how the market has reacted. But again, I think, yes, this is kind of whatever's happened today, GDP. Soft landing is nice, but also as the Fed, they need to be able to react to whatever has happened. So there's going to be a lot of caution, I should say, to watch out for tomorrow. So make sure that you always use protection.
A lot of volatility will come tomorrow, so be aware of that as well.
Number one rule. Okay, all right. Thank you very much, guys. See you tomorrow, and have a good day.
Thank you for watching.